Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, as well as our co-host Amvest Capital, we're very pleased you have joined us for our next live presentation from Skeena Resources. Before I introduce our speaker, a few points to note. Please submit your questions in the question box at the bottom left of the slides. Once the Q&A session is ended, don't log out. You will automatically be transferred into the Skeena Resources booth where you can continue to ask questions via chat and access additional shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Kelly Earle, Vice President of Communications of Skeena Resources Limited, which trades on the OTCQX Best Market under the symbol SKREF and was recently added to the OTCQX Best 50, and also trades on the TSX under the symbol SKE. Welcome back, Kelly.
Thanks very much, Matt. So today I'm going to be talking about Skeena's flagship project, which is the Eskay Creek project, and how we're revitalizing this past-producing mine. We'll jump right into the obligatory forward-looking statements, and next we'll go into our project location. Skeena has two projects in the Golden Triangle of Northwest British Columbia, Snip and Eskay Creek. These are both past-producing mines that we've acquired from Barrick. Snip was an underground mine, narrow vein underground mine, gold only, and Eskay Creek was a past-producing underground gold-silver mine. And our flagship project is really Eskay Creek, and that will be the focus of this presentation. So I know I've presented many times to OTC and to a lot of the investors listening, so I'll just quickly talk about the management team. The whole management team and board is new within about the last 5 years. Our latest addition is Shane Williams. He's our new Chief Operating Officer, and he's an engineer. He's been with us for about a year now, and his focus in the past has really been putting open pit mines in northern climates into production. So he's a perfect fit for us, and we're looking forward to him taking us through to development and hopefully into production as well. And then the only thing I wanted to mention on the board of directors is our latest addition, who is Greg Beard. He recently retired from Apollo Global Management, where he was the head of natural resources. So welcome to Greg. Next, we are going to jump into infrastructure in the Golden Triangle. And I've talked about this slide before, but it's really worth emphasizing the vast improvements in infrastructure since both Snip and Eskay Creek were in production. So these were fly-in, fly-out, diesel-powered operations in the 90s and early 2000s. Since then, there's been over $2 billion invested in infrastructure in the area. Highway 37 and the Northwest Transmission Line goes all the way up to what is now Newcrest's Red Chris mine. And then within the last decade, there have been 3 hydroelectric facilities built right in between Snip and Eskay Creek. So this is very exciting because now we have access to 4 cents Canadian per kilowatt hour power, whereas Eskay Creek was powered solely by diesel historically. So that meant 50% of the operating costs historically were diesel, and now we have access to really cheap hydropower, which makes this a green project, but also dramatically brings down the cost at which to mine, which means we can lower the cutoff grade as well. Now we'll look a bit of the historical production of Eskay, operated from 1994 until 2008, produced 3.3 million ounces of gold, 160 million ounces of silver, and it was the highest grade gold mine in the world when it was in operation. Produced at a staggering 45 grams per ton gold and over 2,000 grams per ton silver. That's running at about 2.5 ounces per ton gold equivalent. And because this mine was so remote and the price of gold was so low when it operated in the 90s and early 2000s, it meant the cutoff grades were very high. So for the first 3 years of the mine life, while they were waiting to build a mill, it was direct shipping ore only, and it had a 30 gram per ton gold equivalent cutoff. Then once the mill was built, it was a 15 gram per ton gold equivalent cutoff. So the thesis in acquiring the project was very simple. What material was left behind that was not economic when this mine was in operation because of the remoteness, extremely high cutoff grades, and low gold price that would be economic now? And then, of course, the second thing we did was look at this from an open pit perspective as opposed to an underground perspective. So this is our current resource. We put this out in November of 2019 along with our preliminary economic assessment. Excited to report that we are on track to have a resource update come out end of March, beginning of April. But the resource as it stands right now is sitting at 4 million ounces at 4.4 grams per ton gold equivalent. So that's the global resource. You'll notice that half of the resource is in the inferred category. So there's over 14 million tons in the inferred category. So we've been very busy infill drilling. We did about 83,000 meters of drilling, the majority of which was infill, to convert all those inferred ounces into the indicated. That's gone extremely well. We weren't able to drill within the 25 meters of the historic workings until last fall, and that's because we had optioned this project from Barrick, and there was a buffer that they'd put around the historic workings of 25 meters. And since we've exercised the option and we now own 100% of the project, we've been able to drill within that 25-meter buffer. We've had some pretty exciting results come out. We've had continuous results, it seems, coming out over the last several months. And specifically in that buffer zone, we've been able to see areas that we thought were waste that we're now able to convert into mineralization with that infill drilling. So that's exciting, and that's going to help us with this upcoming resource update. The other thing that we're looking at is what we're going to call the northern pit expansion. So in this slide here, you can see where the pit ends to the left, and there's a lot of underground ounces there that we haven't captured. So we're actually looking at expanding the pit there to try and capture some of those underground ounces so we can push them forward to the pre-feasibility study. So the PEA was open pit only, and that's going to continue for the PFS and for the full feasibility study. So that's why it's so important that we get this northern pit expansion so that we're able to capture some more ounces in the open pit that were previously underground. We're hopeful that there could be an underground component to the mine in the future, and I'll go through some exploration results we've had. But for the time being for permitting, it will be an open pit only. Next, I'll give a brief overview of the PEA highlights. Again, we put this out in November of 2019. Eskay Creek will have a 9-year mine life, produce 306,000 gold equivalent ounces per year. And we're producing and shipping a straight concentrate. Our CapEx is very modest at only $233 million US. That's the initial CapEx. And there's 2 reasons for that. One, we are not producing doré on site, so no need to build an autoclave, just a concentrate that we're shipping, so that helps to keep costs down. And secondly, this is a past-producing mine. It's brownfield, so there's a lot of existing infrastructure. For example, a permitted tailings storage facility. There's already road access, so that helps to keep the CapEx down as well. So we did the PEA in November of 2019 at $13.25 gold, $16 silver. Depending on how bullish you are on gold, you can see the higher cases. I think the PFS will more likely be done at around $1,500 gold, $20 silver. So you can see the numbers there. After-tax NPV at a 5% discount of $924 million, 65% after-tax IRR, 0.9 of a year after-tax payback. It's such a robust project, and that's because it's just so high grade for an open pit mine. So the average grade right now over the life of mine is about 4.2 grams per ton. And we are very hopeful that these numbers will continue to improve as we put out the PFS, which will be in the summer, and then into the full feasibility study, which we will have out by the end of the year. So I'd like to show this slide because it just shows the proposed mine design, and there's only 2 things that I like to point out on this slide. One is the former waste dump, which I'm going to highlight here. And secondly is the permitted and existing tailings storage facility. So these are both dead lakes or non-fish-bearing lakes. So all the tailings were stored subaqueously historically, and this is where we envision putting the tailings and actually part of the waste rock in the upcoming PFS. And there's ample storage capacity here, and most importantly, it's a permitted discharge point already. So that'll greatly expedite the permitting process because we already have a TSF on site. As for the former waste dump, I mentioned for the first 3 years of mine life, it was direct shipping ore only, and it had a 30 gram per ton cutoff. So that meant anything below 30 grams per ton went into this waste dump, and you can see the piles underneath. So we're pretty confident there's some ounces sitting here, and we're hopefully going to be able to drill this off from the ice this coming winter while the ice is still thick to try to get a better idea of how many ounces are there. And this is hopefully something that we could add to the mine life in the future once the mine is back in production. There's an amazing amount of upside potential left on this project. Shallow ounces were considered cheap ounces historically, and they were very shallow drill holes that were drilled off. So what we've done is use the historic drill holes to help guide our current exploration plan. So this slide will show you our current resource, which is in gold. You can see the pit limits in black. There's the main 21 zone pit on the left, and then the satellite 22 zone pit to the right. All the little blue dots are historic drill holes, anything greater than 3 grams over 2 meters. We inherited a very large database from Barrick, and we've also had some success in drilling. So what we've been focused on is looking for other contact mudstone horizons. So I've mentioned the contact mudstone horizon before. This is a VMS deposit, volcanogenic massive sulfide, which essentially just means it represents the seafloor. You have hot fluids bubbling up, mineralized fluids underneath the ocean floor. They hit the cold ocean water. You get the main exhalative event, and that's the main area of deposition. That's that contact mudstone horizon that you see there in purple. So this was the main mineralized zone that was mostly mined out historically, and below that we have a rhyolite zone that's slightly lower grade. And VMSs are often known to come in stacked sequences because, of course, the seafloor can move over time. So with our exploration drilling, we're looking for other mudstone horizons that occurred earlier in geologic time that would be lower down in the sequence. And we've had some success. These white dots that are popping up right now will show where we've had some exploration success. So I mentioned we did 83,000 meters of drilling in 2020. About the majority of that, I'd say 90% of that was infill. There was a small portion of exploration drilling we did, and we've had some success in these zones here, the water tower zone, the SK Deeps, and the 21A zone. So I'll show you a cross section here in a moment. And secondly, these red circles that are popping up are where we just completed the 5,000 meter near mine exploration drill program. So we wanted to do some drilling very close to the mine where there's some gaps. When you transition from underground to open pit, there's bound to be some gaps in some drilling. So we just wrapped up a few weeks ago this 5,000 meter near mine exploration program. Hopefully be able to add some more near mine ounces and hope to see the results of that program starting to come out, I would say, in March. So next I'll show you a cross section through the 21A zone to just highlight some of the results we've had so far. So you can see here there's a basalt cap on top. Our mineralization is in the dark goldy orange color. You can see the PEA pit limits there. So the 3 drill holes at the top, we're doing infill drilling. There was a hole 6.46 over 34.4 meters. And you can see the ones flagging on either side of that, 25 grams over 35 meters, 11 grams over almost 40 meters. And this is really important because we've noticed as we are doing the infill drilling that we're actually hitting pockets of higher grade than we were expecting. So because we're hitting pockets of higher grade, that means we're actually going to be able to add some ounces while we're doing the infill drilling. And this is one of the reasons, along with the northern pit expansion, why we're so confident we're going to be able to hit 5 million ounces with our resource update that is expected to come out at the end of March, beginning of April. And of course, because we're looking for stacked sequences, once we do the infill drilling, we let these drill holes go deeper. We tagged into 2 exciting new horizons, the new LM zone, the lower mudstone zone, and the new ELM zone, the even lower mudstone zone. So again, these are the exact mudstone horizons that we're looking for in a VMS. The LM zone had spectacular hits like 314 grams over 2.21 meters, 12.27 over 6 meters, and the ELM hit 6.26 over 4.2 meters. So very exciting targets for us. I mentioned we were very focused on infill to stay on track, but these are really exciting targets, and hopefully we'll be able to do some follow-up drilling here later this year and hopefully increase that underground footprint. So I mentioned it's open pit only for now, but we do see a lot of potential underground. So hopefully there will be an an underground component to the Eskay Creek mine in the future. Next, I wanted to show our valuation slide. For those of you who are shareholders who have followed us for a while, you know we've come a long way in this price to net asset value comparison. So we're currently trading at a 0.7 times multiple. We started closer at a 0.2 or 0.3, so we have had a successful year share price rise. But I think everyone in the Skeena team thinks we've got a really long way to go to really prove the value of Eskay Creek. It's a 4 million ounce deposit heading towards 5 million ounces in a tier 1 mining jurisdiction. It's brownfield. It has full First Nation support. We would argue it should really be trading at a premium. And I'll go through a timeline here in a moment that'll show everything that we have planned this year and hopefully how we continue to see that share price increase substantially. And then finally, I'd just like to reiterate the bottom chart just shows how unique Eskay Creek is. So the average grade of an open pit mine worldwide is 1.5 grams per ton, and Eskay Creek sitting all the way up at 4.3 grams per ton gold equivalent. So when we get it back into production, it could be one of the highest grade open pit mines in the world. So here's the timeline that I mentioned. We are just finishing up putting out all our infill drill results. Seems like we've been having releases out every week because the results are coming in so quickly. And that's really important that we get those all out, hopefully by the end of February, so that we're on track to have our resource update out at the end of March, beginning of April. I mentioned we just wrapped up a 5,000 meter exploration program. Hope to have those results start to come out in March. We've officially kicked off the environmental assessment process and commenced our impact benefit agreement negotiation. So in Canada, you have to do what's called an Impact Benefits Agreement, an IBA, with any First Nations communities in the area. So we're very fortunate. We're in Tal Tan territory, and we've already launched that, and that's exciting for us because normally you don't start those negotiations until you're closer to a feasibility stage, and we're only at the PEA stage, so we're really happy that we began negotiation with that. The next major milestone, I would say, would be the resource update that will come out in the spring. That's when we're hopeful to hit that 5 million ounce target. We'll then commence some infill drilling at the northern pit expansion, and I do expect some more exploration drilling to go on later this summer, but it'll be very dependent on the the exploration results from that 5,000 meters that we're waiting on right now. So after the resource update in the spring, the next milestone after that will be the pre-feasibility study. We're looking for quite a large, well, I can't put a number around it yet, but definitely an increase in the mineable ounces going from the PEA to the pre-feasibility study. And that's because of all the infill drilling we're doing and also that northern pit expansion. So we'll see more open pit ounces added to the PFS. So that'll be out in the summer, and then we'll continue to push hard to have the full feasibility study out by the end of the year. And that's when we will kick off project financing. So hopefully by this time next year, we're wrapping up project financing, and then we can start construction. It'll be a phased construction, probably a 2-year phased construction we'd like to start next year. And that's because, as I mentioned, this is a brownfield site. So there's areas that are already permitted, for example, tailings storage facility, some of the road access, things like that, where we could start construction first while we wait for the rest of the mine permits to come in. So hopefully by this time next year, we'll be starting construction. I mentioned we've got some existing permits, and they've already come in handy. We're just wrapping up the building of a 200-person construction camp on site. So there were a lot of buildings left over, the old barracks, warehouses and such that were not torn down by Barrick, and we were able to refurbish a lot of them and build a 200-person permanent construction camp. So that's where we'd like to house everybody while we do the construction period. So a huge benefit already having some permits in place from this being a brownfield site. That's a very quick overview of Eskay Creek. I'm briefly going to touch on Snip. This is our other past producing mine. Again, we acquired this from Barrick. We own this outright 100%. I would mention that Hochschild Mining, a Peruvian underground mining company, has an option to acquire 60% of this project. They have not exercised that option yet. They have until October to do so. We don't really get any value for Snip right now, even though you can see here we have an existing resource between indicated and inferred at 646,000 ounces at 13.5 grams per ton gold. So very high grade underground deposit. And we're looking to create some value for this project at some point this year. We just wrapped up a 5,300 meter exploration drill program. I mentioned Hochschild has the option. In order to exercise that, they'd have to spend 2.5 times what we've spent in the ground. So we'd be carried forward on this project. The other option for this project could be that it could become a satellite deposit for Eskay Creek. So it's about 50 kilometers away. There's a bit of a road extension we'd have to build, but we already have permit for that. So that could be an option as well. We could truck the high-grade ore from Snip over to Eskay. So yet to be determined what will happen, but hopefully we'll be able to unlock some value for Snip here later in the year once we get some more drill results back and decide what we're going to be doing with Snip. The area where we're focused on drilling is a newly identified area called the 200 footwall. It seems to be a parallel vein to what was mined out historically. We had a spectacularly high-grade hit of 1,131 grams over 1.5 meters. So this is the zone where we're focused on infill drilling. And as I mentioned, we just wrapped up 5,300 meters there at the end of 2020. And I would expect to see some results coming out of this in March. And Snip results can always be pretty exciting. You can get some pretty high-grade areas. So I would watch for those to come out in the spring. Last thing I wanted to touch on is our relationship with the Tal Tan. I've already mentioned the Tal Tan. They're our First Nation partners on the project. We're very proud of our relationship with the Tal Tan. We've traveled the world with the President Chad Day promoting mining investment in Skeena and also the Golden Triangle in general through an alliance that we formed with them called the British Columbia Regional Mining Alliance, the first of its kind collaboration between industry, First Nations, and the BC Ministry of Mines. So again, really proud of our relationship, and we just look forward to building the mine hand in hand with the Tal Tan. Next, I'll go to our capital structure side. I mentioned we've had a very exciting year. We just broke a new share price high last week, but I would say we've still got a long way to go with the resource update coming out in the spring where we hope to add another 1 million ounces and then improvements from the PFS and then the full feasibility study out by the end of the year. So we currently have 216 million shares outstanding. We're trading at about an $850 million Canadian market cap. But again, we would argue we've got a very long way to go still in locking all the value from Eskay Creek. So that is a very quick overview of Skeena Resources. I'm going to pull up questions here, and I think I've got just about 10 minutes here. So we have a question: is the BC government supportive of the project? Yes, I would say the BC government's very supportive of this project. They put out a mandate about 2 years ago now to try to expedite the permitting process for brownfield site with First Nation support. So this is exactly what Eskay Creek is: past producing brownfield site. The Tal Tan have great memories of working at Eskay Creek. They would like to see it put back into production. We've had numerous meetings. We just had one last week with the Assistant Deputy Mines Minister on how we can expedite this process. And we're working hand in hand with the Tal Tan, the Ministry of Mines, and our sustainability team to do so. Yes, we are very fortunate to have this brownfield site with a rather low footprint compared to some of the other very large open pit mines that are looking to go back into production or starting production in British Columbia. The next question: what's your preferred financing structure for the mine CapEx? So I would say this is yet to be determined. Again, it'll be probably this time next year where we're looking at financing. We will look at all options. I would think it'd probably be a mixture of debt and equity. We've had streaming options put in front of us. I don't think we'd do a stream on the gold, but this project does have about 20 to 25% of its value in silver or more if the silver price keeps going up. So it will be a combination. We will look at all options and do what makes the most economic sense for Skeena and its shareholders. Next question: do you have to raise any funds for 2021? So we have just under $30 million in the bank right now, so we are financed for everything we'd like to do this year. The caveat being, I suspect we will do more drilling. So I mentioned we've got 5,000 meters we're waiting on at Eskay, 5,300 meters we're waiting on at Snip. If we have some good results there, we would like to follow up with more drilling. So while I say we're funded right now, it doesn't mean we won't raise at some point later in the year to do some more exploration drilling. Next question: do you consider to increase the exploration drill program this year if you help? That's exactly what I said. So would you do more drilling this year if you hit some high-grade gold and silver? And the answer is most definitely, especially at Snip, if we're able to find some good grades there and unlock some more ounces. You know, there's that possibility I mentioned that it could be a satellite deposit to Eskay, and especially also at Eskay, we've barely scratched the surface of the exploration drilling at Eskay. Our exploration teams put together a wish list of over 115,000 meters of drilling they'd like to do. Now that's project-wide, and we're not going to do that. That's their dream. It'll be very dependent on the results that we get in. But yes, I do see us doing more exploration drilling at both projects later in the year. So the next is: will COVID cause delays to moving independent people around for completion of the new resources in the PFS? So I would say COVID definitely caused some delays last year. So we shut down in March and had to shut down for about 3 months until we could get COVID protocols in place. It seems to be a well-oiled machine now. We're over 500,000 person hours COVID-free, knock on wood. That will continue. We have come up with a program where we isolate people at different camps. Everyone's in their isolated groups for 2 weeks. We have an app that people fill out ahead of time for 2 weeks to monitor symptoms. So I would say it was a delay, but we don't see any delays in the future. We've brought on an infection prevention specialist, health and safety specialist. It's a well-oiled machine at site right now. So we don't see any delays in putting the resource update out, which is still on track to come out in March, beginning of April, and that PFS will be out in the summer. Let's see, exploration drilling results, rest of the year, and status, Snip drilling, and Hochschild option. So I think I mentioned the Hochschild option. That'll expire in October, and they have not pulled the trigger on that yet. Exploration drilling, again, because we're waiting on drill results from both Snip and Eskay, it's hard to say how much or where we'll be drilling yet because they're very results dependent. So I cannot yet comment on exactly where, but I do see us doing some more exploration drilling definitely later in the summer. So we have a question about smelters here. Are there any smelters that cannot take the concentrates due to deleterious elements? Do the smelters charge excessively for these elements? So the deleterious element levels at Snip were a concern before we put the PEA out. So there's a direct correlation between the grade at SK and the amount of mercury and arsenic. So when they were producing at 2.5 ounces per ton out of that contact mudstone horizon, the deleterious element levels were that much higher. And we only see mercury and arsenic in that contact mudstone horizon, which was mostly mined out historically. Only about 30% of our resources in that contact mudstone. The rest of it is in the lower grade rhyolite horizon, which does not have the smelter penalties. It doesn't have any mercury or arsenic. And I know there's some major concerns, but I think we put those all to rest with the PEA that put out. We received offers for life of mine concentrate contracts from smelters when we did the PEA. We've continued to work with smelters. We're sending samples of the concentrate off to smelters as we speak. We've received better terms than the PEA. I suspect we'll see an improvement on the PEA terms when the PFS comes out. So I think the specific question is there anywhere that cannot take the concentrate? And no, we have not felt that because it's a gold concentrate, not a copper concentrate. It's in quite high demand because it's a gold concentrate. And I would not say the smelter charges that we had in the PEA were excessive by any means. So in the PEA, the concentrate was running 25 gram per ton gold and 400 to 600 gram per ton silver. So it was running an ounce gold equivalent per ton. And smelter penalties we only pay in the first 3 years of the mine life when we mine through that contact mudstone horizon. And year one, the smelter penalties were $75 a ton. Year two was $60, and year three was $40 a ton. So I wouldn't call those excessive by any means. It's pretty modest on a concentrate that's running an ounce gold equivalent per ton. And as I mentioned, we've continued to receive more offers from smelters, and we actually are hoping to see a bit of an improvement on the terms as the PFS comes out. Another question here was a strip ratio. Average life of mine strip ratio currently is about 7.5 to 1. It's a pretty shallow pit, 236 meters is max depth, but I expect that ratio to change slightly as we look at the northern pit expansion for the pit for the upcoming PFS. How realistic is it that you'll be able to produce 500,000 ounces of gold equivalent a year? So we're ways off from that. We're at 306,000 gold equivalent ounces per year. It would be amazing if we could get to 500,000. I don't see that in the near future. In order to do that, we'd have to hit some majorly high grade pockets of mineralization or increase the throughput. So we're looking at 6,800 tons per day right now. I know there's been discussions about trying to increase that to see if we can get the ounces up higher, but no, I don't have a timeline on when or if we'll ever hit that 500,000 ounce gold equivalent per year mark. Let me see. Has there been interest from senior companies? So yes, I would say most definitely we've had interest from mid-tiers and majors. We've been picky, I would say, about letting people into our data room. We've just started that process now. We have a couple groups that we like and we trust who are investigating the data room, and there most definitely has been interest in this project from mid-tiers and majors. It's a wonderfully high-grade mine in a great jurisdiction. But with that said, Skeena is not looking at selling it anytime soon. It would have to take a pretty spectacular offer for us to consider selling the deposit right now. We see a lot of value left that we can lock with resource update, pushing it through permitting, negotiations with the Tal Tan, PFS, full feasibility. There's a lot of value left that Skeena can bring before we'd entertain a buyout offer. Another question says production 2023. So we've been saying our base case is Q1 2024, and that's because I've been saying a 2-year construction period. So construction would start this time next year and be 2-year. We call that our base case because there's always room for improvement. We are working hard with the BC Ministry of Mines and the Tal Tan to identify areas of the mine that don't have to go through the full environmental assessment program process. And that's because areas like the tailing storage facility have been monitored continuously for the last 2 decades. So we're working through with Tal Tan and government right now to try and expedite the permitting process. I don't have an official timeline yet. That's why I'm saying our base case for production is 2024. But of course, we're going to do everything we can to try and to do better than that. Next question. The PEA, the all-in sustaining costs were pretty low. Do you think you can Do you think you can keep costs this low in the PFS and the full feasibility study? So, of course, I don't know the numbers yet for what the all-in sustaining cost will be for the PFS or the full feasibility. We're sitting at US $650 an ounce, but I do suspect they will still remain pretty low, and that's because this is such a high-grade mine for an open pit. As I mentioned, the smelter penalties are low, and we suspect they could go even lower. So I don't see anything major that'll change the all-in sustaining cost. I could see the CapEx maybe going up slightly. You generally see that from a PEA to a PFS, and that's because the PEA is, of course, just a first look at economics, and then you go into more detail. So I could see the CapEx going up slightly, but I don't see the all-in sustaining costs jumping substantially because we're not really changing much from the PEA through to the PFS. And in fact, there should be some savings in terms of shipping costs and trucking costs because we've been able to improve the circuits for the metallurgy and the recoveries. And there's the ability for us to be able to create a higher grade concentrate now. So that could actually save some shipping costs. So you can take all that in, and I don't really see the all-in sustaining costs changing substantially. I think I have answered all of the questions. So with that, and I just noticed I went slightly over my time, so with that, I will sign off, and thank you very much for joining me today to learn about Skeena's Eskay Creek project.